As your business has continued to experience success, you're hitting new milestones in revenue. Possibly there is a plateau in the profitability of your business, and you might be starting to feel the pain that your financial system is no longer able to keep up with the pace that the rest of the company is operating at. The bookkeeper who's gotten you to this point so far is taking longer and longer in order to close each month. There are more complex questions that must be addressed. And tax time with your CPA is a lot of back and forth and adjustments, and a lot of that back and forth falls on you as the business owner. And so it might be time for you to consider bringing a financial controller into your company. As businesses grow, it's only natural for the financial reporting needs of that company to become more sophisticated. Your accounting is no longer just about making sure that the revenue and the expenses are properly categorized. You now have purchase orders and payment terms and billing milestones. You've got sales tax, workers' comp, payroll, multiple states, revenue reporting. This is where the role of a financial controller really comes into play in a growing business. So the big question is, how do you know that you are ready for a financial controller? And more importantly, what kind of an impact on the profitability of that company can you expect from hiring a financial controller? We're going to get to that in a minute, but first I want to talk about the differences in some of the terms you might have heard, such as bookkeeper or a CFO or a controller, so that we know what the difference is and where each fits into your company's future. And so, as you know, a bookkeeper, who you hopefully have already had up to this point, is really the backbone of the daily operations of your company. Accounting needs. They are the keeper of the books. They make sure that all the revenue and the expenses match the bank statements. They make sure that the bank account is reconciled each month. And they also ensure that accounts receivable and accounts payable within that company are accurate. But as your business grows, these tasks become much more complicated than one person can handle. A CFO, on the other hand, is more of a strategic level. They're involved in the higher level, kind of future-looking focus of the business. As your company expands even further, you might be looking at new markets, new pricing, possibly outside investors. And a CFO is really going to be able to make those decisions on behalf of the company. Part of that C-suite means that they are actually making those decisions, taking responsibility for those decisions. The controller sits right in the middle of these two roles. So a controller ensures that the financial data is accurate and that the processes are moving efficiently. They're responsible for producing the financial statements, managing any budgets, and also especially making sure that other people within the accounting department are doing what they're supposed to be doing. They are in control of your chart of accounts, which is your accounting system, and they are in control of making sure that every month it is closed quickly and efficiently, and everybody's doing what they're supposed to be doing, so that you as the owner can have the information you need in order to make timely decisions. So now that we know the differences between a bookkeeper, a controller, and a CFO, what are the signs that you should look for that might indicate it's time for you to hire a controller within your company? So the first one that I already hinted at is that complexity overload. If your financial transactions are just becoming too much for a single bookkeeper to handle, it might be time to bring in a financial controller. A financial controller does not replace a bookkeeper. A financial controller oversees a bookkeeper. At a certain stage in your company, you might have one or two bookkeepers. You might have somebody whose job is collections, contacting customers and getting payment on past due invoices. You might have somebody whose entire job is expense reporting. A controller would also work with your HR department to make sure that payroll is being paid properly and on a regular basis. You might have salespeople who are out in the field sending invoices back to the accounting team. That accounting team needs to make sure that payment terms are being properly recorded and that milestone billing is being done. You might have project managers who are in charge of job costing, and that job costing, those purchase orders, and the payables all need to flow through the accounting so that vendors are being paid and projects are moving at optimal speed. That all comes back to a controller who is coordinating all of these roles. It's actually really helpful to think of a controller as your accounting project manager within your company. And so when you bring in the controller, you want to make sure that anything that touches on the financial aspect of your business funnels through that controller, especially if it's on the prior month, closing the prior month. I've seen too many companies that'll have somebody over here doing a task and somebody over here doing another task, and then they have a controller who's not really in charge of the people over here, but they're supposed to make sense of everything that's happening. That's not what you want a controller. A controller is the project manager for the entire accounting function in your company. And so they need to have the control to make sure that everything is happening properly. The second sign that it is time to bring a controller into your company is based off of your plans for strategic growth of the company. You as a business owner should not at this point be doing your bookkeeping. You should be focused on the future. You should not be overseeing the financial aspects of the company either. This is the role that a controller brings to a company. It is their job to make sure that these things are moving smoothly so that you know that the past is taken care of and the information that you're looking at is timely and you can make good decisions on the future. Part of this also, the strategy could be your plans for succession or bringing in an additional partner or possibly mergers, growth through acquisition. A controller is going to make sure that that accounting department process is smooth and continues as possibly you retire from your company and somebody else steps into that position. There's going to be consistency there in the financial processes, which is really one of the biggest keys towards making sure that your business value continues after you leave. And the third sign that you're ready to bring a controller into your business is going to be a certain revenue threshold. $7 to $10 million in a company is where you really start to see an accounting department develop, the controller being the head of the accounting department. And I like to tell my clients that you should expect to spend about 3 to 4% on an effective accounting department to cover all of that. That includes the controller, that includes any bookkeepers, that includes the tax function within that company. At that threshold, $7 to $10 million, that's going to give you enough of a budget to make sure that you can have an accounting department. I'm about to jump into cost. What does it cost to hire a controller? But after that, we're going to talk about what the controller actually brings in exchange for that cost. But first, cost. So in this area, you can expect to pay anywhere from $100,000, $120,000 up to $150,000, $180,000 for a controller, depending on your industry, obviously, and it's going to differ based off of where you are in the country. But that's a ballpark for total compensation that you're looking at for a financial controller. So if you're still with me in this video after that, I understand that is quite a sticker shock. Small businesses typically do not pay that kind of money for their accounting function. You'd try to get the cheapest bookkeeper possible at a part-time basis, and this kept you going up to this point. But your business is scaling and your business is growing, and so it's going to take significant investment to make sure that things are going smoothly. And that's what a controller really does. They bring sense to the books. They make sure that everything is accurately reported, but more than that, they dig in to those amounts. They will contact vendors if there are differences from what the purchase orders say to what the payables say. They will again be overseeing it to make sure customers are paying timely and that all flows through the books properly. And so they're going to really be an investment and recoup a lot of that cost. But the biggest thing to you as a business owner is going to be the timing of that financial delivery. Every decision you make that doesn't have timely financials to back up that decision is an uninformed, costly decision. And so it is really the controller's job, in control of that monthly close, to make sure that the accounting department is moving. Are we closing the month within 2 weeks of the end of the prior month, or even less than that in some companies, so that you as the business owner are not making those decisions in the dark. You're making informed decisions based off of good data. And that's really where you're going to see your cost recovered. As I stated at the beginning of this video, you're starting to feel the pain of your scaling business without a controller in place. And so a controller is going to alleviate a lot of that pain. But in order for that to happen, you have to be willing to invest in an accounting department, and you have to give the controller control over that accounting department and that monthly close so that everything moves efficiently and effectively so that we can get that monthly close process down. In the next video, I'm going to talk about that monthly close process, what a controller actually is looking at, and then what you as a business owner should actually be looking at, so that you're not just getting an income statement from your controller and lost as to what to look at. My name is Barry Young. I'm a partner here at GWCPA. We work with succession planning businesses that are scaling, and I want to thank you for watching this video, and I will see you on the next one.